All right, ladies and gentlemen, today is Wednesday, July 22nd, and the stock market, it's been getting one of the biggest of the day because Tesla and Microsoft reported earnings for Q2. So before we get into there, let's talk about some of the trades that I made today. As you can see from the screen, the trades that I made today are really circling around a couple of the stocks I talked about yesterday in the watch list, TER. And then today also, OLL is breaking out. So I'm buying some calls. Then I'm taking profit on the team, the Malaysian software companies. Also, I bought a couple of calls on a DOCU, which is the DocSign. And I made a little trade on Tesla, which, I'll get into that particular one later of the day. But first of all, let's look at the TER. I think the TER I'm mentioning the watch list for some of you have not get a chance to look it out post the video. But basically TER is getting its first, it's breaking out a little bit, but then today yesterday after the market closed and they reported earnings and then really it went up in the during the extended hour. And in the morning, it kind of dropped a little bit, and then it's kind of flat right here. So what I did, basically, I'm buying a couple of TER calls, way out of the couple months out, August 21st, buying the TER call at $105. So I think I paid about $50 per call, and I did 2 trades, kind of small positions, but we'll see. Towards the end of the day, it kind of got collapsed at around 35, 55, but the last trade was made at $55. So I'll keep monitoring that, and then we still have a lot of time on these 2 calls. So I'll monitor and then figure out what to do on this. But usually what you probably wanted to think about is, there's a time decay with the option call, but in the meantime, there's leverage factors. And once they get into in the money, it really, really would increase the price of the call price. For example, this 87.5 call is right now selling at $5. So assuming that would happen to 100, 105 during the August, which I don't think is very likely, but a lot of people are very bullish about the call position on TER. You can see the open interest, the volume on those 2 positions have really picked up because the earning surprise yesterday, and people are piling up on the long-term bullish position on this stock. Follow up with that, the other trade I made today, basically, it's about the OLLI. OLLI, for some of you don't know, it's basically an outlet company selling different brand products. So this morning, OLLI really breaking out significantly. I think that with a 10% increase, it jumped from $98 all the way to $110, in the last couple of days. So it breaks out from here, but in the morning I was, getting alerts from other sources. But LLI is one of the things I participated. Again, small position here and there. Don't want it to be too crazy on that. And this is the benefit of buying options and selling options, because you can, put in small money, $20, $50, and really trying to leverage the market and enjoy the upward trajectory when the stock goes up. So what I did, I did a 2 call on the OLLI at the price of $64. The last sold price was $75, but then towards the end of the day, the market is around $20 and $125. So I don't know where it's going to go in the next couple of days, but looking at it on the chart here, they have some interesting characteristics that I wanted to talk to you guys. For example, this stock, if we look at the daily chart, it has, surprisingly, because the COVID is dropped, but then since that afterwards, it really has been ramping up significantly. Apparently, OLLI is not so much impacted by the COVID-19, considered it's a retail business. So that's something unique about this particular company, and that really drew me into it. It's very similar to Costco. So Costco is getting new breaking out here and there. So I expect OLL hopefully will stay similar in a similar position as Costco and Walmart. So that's what I did. Where it's coming from with I put $100 here and there to buy it. Oh, I really trying to enjoy the the upward trajectory here. And then I closed my Team trade. Team is a software company, Alation. They provide a Jira and Confluence page for all the developers around the world. Because of COVID-19, everybody has been working remotely. So I initially had a Team, I sold a Team put. Basically what I did is I sold a Team put at the price of, I think at the 145, 135 level. So what does that really mean? When I'm selling a Team put, 145, I'm expecting the stock to be above 145. And I think when I did that, it was trading around 170, 160. Now the stock went all the way up to 191. So they actually dropped, but there's a pop here around the 198. So with that being said, the fact that I sold a put spread here, it's in my favor in the sense that I can close it and then buy it back with a much cheaper value. So that's what I did. I initially sold it for about $250. And then today, when I closed the Team trade, I had to pay about $50. So in a couple of weeks, I was able to take a profit of $200 by just staying on the sideline, watching the stock goes up. So this is really the benefit of selling out of the money put spread. So the way you can do that is, you can go to the Team. Let me go there. For example, if we want to do a particular trade on the Team, you can look at the entire option chain and look at which one has the most premium, which signified by the implied volatility rank. So in 76, 64, 59, you always wanted to do a couple of weeks out. And then for the August, say for example, if we're interested about August 28th, which is a month out, I can again sell a spread of 155, and I can close it up with 140 for a kind of protection. Just give me a credit of $1.40. For some of you who don't know, $1.40 is really the price of the option, but when it comes to 100, each option call equals 100 shares. So really, we're talking about getting a profit of $140. And this is betting on the fact that stock will stay above 155 by August 28th. So, this is really the power of selling premium here. This actually, if you consider that the Thinkorswim does a good job telling you, this is the max profit you can get and the max loss, but in this particular trade, this is what you're going to get. Max loss is significantly higher than max profit, but the chance of it drops to 155 is not very likely. So those are the trade-offs you have to consider when you're selling a put spread. All right, so now we talk about the DocSign. DocSign is a company, providing digital signatures. So I bought a couple of DocSign, long call for $300 at the price of $300. With I paid about $25. DocSign, trying to see if it will, break. It will have the similar impact as other software companies. If you look at the DocSign, it has the peak was around 213. And then it kind of dropped and it stayed above here for a couple more days. So I'm really expecting that, this is a consolidation and it will take a couple of days to enjoy this level and then hopefully it will pop up again. But, the chances hitting $300 is not very likely if you look at the weekly chart. The 17 is almost the peak of the DocSign. So $300, we're talking about, 3 standard deviation away. So what I would potentially do is if they break up at another significant level, I think maybe around 220, 225, the call price on those will go up. So I can end up selling it back more. If I can sell it back more than $25, then I can take the profit there. Right. So August 21st is the call that I bought for the DocSign. $25 a piece, small investment here and there, and trying to write it out. And lastly, we want to talk about Tesla. Tesla, as I mentioned yesterday, Tesla is reporting earnings. So some of you already found out what's the earnings report, but basically, I did a trade earlier before the earnings report. I think around 12 o'clock Pacific time, I did a Tesla trade. So what I did, basically, I'm betting it was drop for Tesla. So, Tesla is a very, very volatile stock, and it's a lot of premium if you want to purchase any particular options. So I'm pretty much very far out September 18th. That's the trade I made. I'm looking at the option chains here. Tesla is very extended. I don't want to chase the stock. So I hope, this could be a surprise that, everybody is anticipating Tesla will be doing good, but, we never know. At the time I was doing the trade, I wanted to bet Tesla is gonna be not as good as what people were thinking about. So I did a little bit small trade there for $900. At the price of $900, I bought a put spread. However, the put spread itself is costing about $2,000. So that's a lot of premium for a lot of the small and the people, small investors, retail investors. So let me tell you a way to hedge that. You can do that by doing a spread. Basically, the trade I did is very similar to buying a put. However, instead of buying a put and paying $2,000 in the beginning, I can buy a put and I can also sell another further out of the money put for $19.25. So basically, what this means is that if you look at, let me close all those Tesla trades. Basically, what it means that I can get a profit of $360. I can get the maximum loss of $360, and with the potential of making $3,000. So let's just show you how it's actually being calculated. So buying a put spread and selling a further money out of money put spread. Right, so you're talking about $393 if you confirm that your maximum loss is $393, but your maximum profit is about $4,000. So it really, to me at the time, was a good trade. I feel like the return of initial investment is good, providing 10 times over returns. So I want to participate in Tesla and see how it goes. And the fact that you can make profit is when you look at the risk graph. So basically, the risk graph would indicate that for Tesla, this particular stock to make a profit, you have to look at the break-even price, which let me set that for you. We're talking about as long as Tesla is have stayed below 896, and then that's the chance that I will make full profit. But this is very, very unlikely considering Tesla price is about $1,600. So again, the rationale here is if it drops because of the earning tomorrow and when the market really opens, if it drops, then I can try to see if I can close it and take the profit out there. Of course, I don't expect it will go below 896. As long as it goes below 1,200 or 1,300, I think that there's going to be a decent amount of profit I can take. And then, Lord and behold, Tesla reported earnings. So I think the Tesla earnings, even though it's kind of, it's a good report, but there was a lot of interesting move. Initially it went all the way up and then kind of dropped down and it went up. Now it's kind of stayed sideways of 1663. I think the historical high is 1694, but it's very close to that. Actually, I take that back. I think the highest point was 1794. So right now it's consolidated here, and the fact that Tesla will be included in the SPY in the S&P 500 is really bullish sign. A lot of mutual funds and other companies are going to buy that, and they just clear the hurdle of being included in the S&P 500. So tomorrow I'll start, probably think about how to manage this particular trade that I did today. Again, this is small investment to take some risk and trying to see if there's any potential opportunities with the surprise. So that's it. Those are the plays that I made today. And then tomorrow I'll be looking at some other stocks that I'm interested in. So Twitter, Tesla, and Microsoft. Twitter is going to report earnings tomorrow. I think that Twitter, it's going to enjoy the same kind of, anticipation as Snap and Facebook. I have a small position in Twitter. I'm buying the Twitter put and with September 18, and with a very far out of money, $22. The Twitter has been doing well, but one of the biggest drawbacks about Twitter is the fact that it was not able to monetize well. So the fact that a lot of the celebrities and well-known figures, their account being hacked is one of another potential uncertainty that will kick in during the earnings. So I have some Twitter puts further out of the money, and again I have another Twitter play which is more bullish on that on the cost side, where if it goes to above $36 and hits maybe $40, $41. So I'm leveraging on the both sides with the difference of the time constraints. So hopefully the ideal scenario in that is that Twitter will go up tomorrow, and then I can close the August 21st call. And then after maybe in early August it will drop. Then I can take it back off. I have the September puts. But that's very that's very, very, well, you never know. That's a scenario. That's the ideal case. So we'll see how it goes. The other stock I'm looking at is the Microsoft. Microsoft reported earnings today. It actually beats the Wall Street expectation because the revenues they're getting from the cloud business. But I have a couple of costs here on the Microsoft, but the fact that it dropped really worried me. On the post earnings here, if you look at the 15-minute chart, it kind of dropped significantly from 211 to 204, and then it went back up a little bit. But these are extended hour. You never know how it's going to be in tomorrow morning. Luckily, I have a couple call options really, really far out of in August, so I have enough time to wait it out to see how it goes. All right, guys. So here is the trades that I made today and things I'm looking for tomorrow. And really, this is one of the bigger ones that are coming in. Tesla and Microsoft both reported earnings, but it's still very far in the beginning phase of the earnings season. We have more companies reporting soon. So making sure you subscribe, and we'll talk about the plays and trades that potentially you can get some inspiration on. So with that being said, I'll see you tomorrow.